All right, earnings season is here, and you know what that means, right?
Time to roll up our sleeves and dig into some fresh financials.
You got it. So let's dive into the latest quarterly report from Dick's Sporting Goods.
The one and only DKS,
Exact.
filed just yesterday, November 26th, 2024,
Covering their third quarter.
which wrapped up November 2nd.
And, we're on a mission here.
Always on a mission.
We want to unpack the story behind the numbers, right? Like what's really driving their performance.
Absolutely. Got to look beyond the surface.
And also what this tells us about the bigger picture, right? The retail landscape, especially for sporting goods, in this environment.
Yeah, it's a fascinating space to watch.
It really is.
Dick's could be a real bellwether for the entire sector.
Ooh, I like that. A bellwether.
It's not just about how much folks are spending on sports gear.
Right.
It's a glimpse into how consumer behavior might be shifting as a whole.
Okay, so with that in mind, let's jump right into the headline news.
Let's do it.
Dick's comparable sales jumped up 4.2%.
Not too shabby.
Definitely solid, especially because, they had that calendar quirk.
Oh yeah, the little wrinkle.
That actually cost them a big chunk of sales, like $105 million, if I remember correctly.
It all goes back to that 53-week fiscal year they had in 2023.
Ah, right.
Creates some fun little discrepancies when we compare this year to last.
So basically, their sales growth would look even stronger if we factored that in.
Way stronger.
And you know what? They're outperforming a lot of retailers who are, let's face it, having a tougher time right now.
Yeah, the retail landscape is, well, it's challenging.
So that 4.2% increase is even more impressive than it looks on the surface.
You can say that again.
But it's not just luck, is it? They've got a plan.
Definitely not luck. They've got a strategy in play.
They're really investing in this experiential retail concept.
Create a whole vibe, you know?
Yeah.
It's about an immersive experience that goes way beyond just browsing.
Okay, so less like a typical store and more like a destination almost.
That's the idea.
So tell me more. What are we talking about specifically?
Their big focus is on these two concepts, House of Sport and Dick's Field House.
I've heard about those, yeah.
They're aiming to redefine the shopping experience.
Bold statement.
Right. And they're pretty confident about it, too.
But do the numbers back it up? That's what I want to know.
Well, let's dive into the financials.
Let's do it.
Net sales for the quarter hit $3.06 billion.
Okay.
It's a slight increase year over year, but remember that calendar shift, it's masking some of their true strength.
Right, right.
But what really jumps out is their earnings per share.
Okay, tell me more.
$2.75, a 15% jump from last year.
That's a pretty big jump.
Investors are definitely going to be paying attention to that.
Definitely a good sign. Strong profitability.
Exactly. And their year-to-date performance is solid, too.
How so?
Comparable sales up 4.7%.
Okay.
They've got an improved EBT margin, which basically means they're keeping more profit from each dollar of sales.
So they're getting more efficient.
And on top of that, earnings per share are also up for the year so far.
So overall, a pretty positive trajectory.
Definitely trending upwards.
Right.
And, they're putting their money where their mouth is.
Meaning.
Capital expenditures, they've gone way up compared to last year.
Okay.
This shows a strong commitment to those growth initiatives, like the House of Sport and Field House concepts.
They're all in?
Seems like it, but they're not just spending money, they're also giving back to shareholders.
Dividends and buybacks and all that good stuff.
Yeah, share repurchases are actually down, while dividend payouts have increased.
It's all about balance.
Right. Got to keep those investors happy while also investing in the future.
So smart move. Now let's talk about their physical stores.
Brick and mortar.
Are they opening a ton of new locations?
They are. And it's not just any store. They're laser focused on those House of Sport and Field House concepts, the flagships.
I see, making a statement.
As of November 2nd, they have 17 House of Sport locations and 22 Field Houses.
Wow, that's a lot. And I know they've opened a bunch of new ones just this year, right?
Yeah. 5 new House of Sports and 11 new Field Houses.
That's a serious expansion, especially considering some retailers are actually, scaling back.
It's a bold move, for sure.
So they're really going all in on this experiential approach.
But the big question is, does it actually work?
That's what the analysts are trying to figure out, right?
Exactly. They're watching closely to see if the entire sporting goods sector is outperforming retail as a whole.
Okay.
And more importantly, they're trying to figure out if these experiential store formats are actually resonating with consumers.
Because at the end of the day, it doesn't matter how cool your stores are if no one's shopping there.
You hit the nail on the head.
So what are some of the risks and rewards of this strategy?
Well, one risk is that the novelty wears off.
Yeah, people get bored easily.
Right, and there's always the threat of online shopping continuing to, you know,
Chip away.
yeah, eat away at those brick-and-mortar
Yes.
sales.
It's a constant battle.
But if they can really create a destination,
A place people actually want to be.
yeah, a place where they connect with their love of sports and experience something unique, then that's a massive win.
It's all about differentiation.
Absolutely, offering something you just can't get online.
I like it. Okay, so let's get our hands dirty.
Time to dig into the details.
Let's look at Dick's financial performance. What really jumps out at you when you see these numbers?
Well, their cash position is pretty impressive.
Okay.
They've got $1.46 billion in cash and cash equivalents.
Wow, that's a lot of cash on hand.
It gives them a lot of flexibility, to make strategic moves.
For sure, that's a good position to be in.
Definitely. It's a significant increase from last year, too, which indicates they're managing their finances well.
Strong cash flow.
Exactly. So they're sitting pretty with a healthy cash reserve. Now, what about inventory?
Inventory, always a tricky one for retailers.
Especially in this economy, too much or too little can really hurt.
So what's the story with Dick's inventory?
Well, it's up 13% compared to last year.
Is that good or bad?
Could be a sign of confidence, stocking up for the holidays, anticipating a surge in demand.
Makes sense.
But it also carries some risk. What if sales don't meet those expectations?
Could lead to markdowns and hurt their profits.
Exactly. It's
Yeah.
definitely something to watch in the next quarter's report.
Okay, so inventory situation, we'll keep an eye on that. Now, what about debt? Are they taking on a lot of debt to fuel this growth?
Interestingly, their total debt has stayed relatively stable compared to last year,
Okay.
about $1.48 billion.
So they're not over-leveraging themselves,
Doesn't seem like it. They're taking a fiscally responsible approach.
which is a good sign, always.
Now, let's circle back to those new store concepts.
House of Sport and Field House.
We know they're busy opening these locations, but are they mainly building brand new stores or converting existing ones?
Yeah, good question.
It's a mix of both. They're strategically relocating and remodeling existing stores.
Smart. Making the most of what they already have.
But they're also opening some brand new locations in key markets.
So it's a two-pronged approach.
Exactly. All about maximizing efficiency.
Now, we talked about how analysts are, watching closely to see if this whole experiential retail strategy pays off.
They're eager to see the results.
What are some of the key metrics they'll be looking at?
Well, foot traffic is a big one.
Makes sense. Are people actually going to these stores?
Right. And more importantly, are they spending money?
So sales per square foot, all those important metrics.
Customer conversion rates, average transaction values, all of that.
It's all about the data,
It all comes down to the numbers.
but it's not all about numbers, right?
There's the softer side of the equation too. Brand perception, customer loyalty, the buzz.
Right, how people feel about the brand.
Yeah, how they're talking about it. Are they excited?
So it's a combination of hard data and softer metrics.
Exactly. Got to look at the whole picture.
Okay, so we've covered a lot of ground here. Financials, strategy, the whole experiential retail thing. But there's one piece of the puzzle we haven't talked about much. Sustainability.
You're right. We haven't dived into that yet.
Dick's mentioned it in their press release, but they were pretty vague on the details.
It's a hot topic these days.
It is, and consumers are paying attention
We want to know what companies are doing.
to make a difference.
Right. It's not just about profits anymore.
So what's the story with Dick's and sustainability? Are they just talking the talk or are they walking the walk?
That's the million-dollar question, isn't it?
It is, and unfortunately, we don't have a lot to go on from this press release.
It's a bit of a missed opportunity, I think.
They could have used this as a chance to highlight their efforts.
Yeah, show that they're serious about it.
Maybe we'll see more details in their next sustainability report.
Fingers crossed.
All right, let's take a step back for a second. What are the key takeaways from our deep dive so far?
Well, first of all, Dick's is doing well financially. They're growing sales, increasing earnings, and their balance sheet looks solid.
They seem to be handling the current retail environment better than some.
They're not just surviving, they're thriving.
And a big part of that is their focus on this experiential retail concept.
Those House of Sport and Field House locations, they're betting big on those.
And it's a bold bet.
It is. We'll have to wait and see if it pays off in the long run.
The data will tell the story.
And then there's the question of sustainability.
Right. We need more information there.
We'll be watching closely to see what they do next.
Okay, but remember, folks, this is your deep dive, too.
Exactly. This isn't just us talking at you.
We want you to engage with this material, think critically, and form your own opinions.
The financial statements are publicly available. Take a look for yourselves.
especially the balance sheet and cash flow statements.
They can reveal a lot about a company's financial health.
And don't forget to share your thoughts with us.
Jump into the comment section on our social media or shoot us an email.
We want to hear what stood out to you, what surprised you, or even what other companies you'd like us to do a deep dive on.
Always looking for new ideas.
Because the best part of these deep dives is the questions they raise.
Absolutely. It's all about sparking curiosity.
And speaking of questions, I have one final thought for you to ponder.
Hit me with it.
We talked about experiential retail and sustainability, but there's another force at play that could have a massive impact on Dick's future. Technology.
Ah, yes. Technology, the game changer.
And it's changing so much, so rapidly.
Think about augmented reality, virtual try-ons, personalized recommendations. All of that is changing the way we shop.
And how will Dick's leverage these technologies to enhance the in-store experience?
Right. And how will they compete with the online giants like Amazon?
It's a tough question, but it's a crucial one.
We'll be watching closely to see how it all plays out.
All right, folks, that wraps up part 1 of our deep dive into Dick's Sporting Goods Q3 earnings.
But don't go anywhere. We'll be right back with more insights and analysis in part 2.
Welcome back to our deep dive into Dick's Sporting Goods. We're ready to go even deeper.
It's fascinating to see how Dick's is adapting and innovating.
They're really trying to stay ahead of the curve.
It reminds me of that quote, the illiterate of the 21st century will not be those who cannot read and write,
Oh yeah, I've heard that once.
but those who cannot learn, unlearn, and relearn.
It's so true, especially in retail.
Companies have to be willing to let go of the old ways
Embrace the new.
and rethink the entire in-store experience.
Because it's not just about selling stuff anymore.
It's about creating a destination, a vibe.
A place where people want to spend time.
Exactly. So let's dive back into those financials and see what else we can uncover.
All right, you mentioned earlier that their balance sheet caught your eye. What specifically stood out to you?
Their cash position. It's really strong.
How so?
$1.46 billion in cash and cash equivalents.
Wow, that's a lot of financial firepower.
It gives them a lot of flexibility to invest, to weather any storms.
Or even make acquisitions if they wanted to.
Exactly. They're in a strong position.
Okay, so their cash position is solid. What about inventory? We talked about how it's up 13% compared to last year.
Right. It could be a sign of confidence.
Stocking up for the holidays.
But we have to consider the risks, too.
Like, what if sales don't meet expectations?
They could end up with excess inventory, markdowns, and that would hurt their profitability.
It's a delicate balance.
They need to get it just right.
Okay, so inventory, something to keep an eye on. What about debt? Are they taking on a lot of debt to fuel this growth?
Actually, their total debt is pretty stable compared to last year,
Okay.
about $1.48 billion.
So they're not over-leveraging themselves?
They're being responsible, which is good to see.
It's a long-term play.
Sustainable growth, that's the goal.
Now let's talk about those new store concepts again. We know they're expanding the House of Sport and Field House locations, but how are they choosing where to open these stores?
They're being very strategic about it.
Like, what are they looking for?
Strong demographics, areas with high disposable income, and a passion for sports.
So they're really targeting their ideal customer.
Exactly. They want to be in the right locations.
Now, we talked about how analysts are watching closely to see if this experiential retail strategy works. What are some of the early indicators they'll be looking for?
Foot traffic is a big one.
Are people actually visiting these stores?
And more importantly, are they spending money?
So sales per square foot, conversion rates, all of that.
It's all about the data, proving that this approach works.
But it's not just about the numbers, right?
There's also brand perception, customer loyalty, the buzz factor.
How do you measure those things?
You have to track things like brand sentiment, customer reviews, social media engagement, and even press coverage.
So it's about understanding how people feel about the brand.
It's about creating a brand that people love.
Okay, so we've looked at their financials, their store expansion, and the key metrics for success. But let's talk more about sustainability.
Right, we touched on it earlier.
What are some of the specific challenges and opportunities that Dick's faces when it comes to sustainability?
Well, one of the biggest challenges is this scale of their operations, their supply chain, their stores. It's all massive.
So making meaningful changes is a huge undertaking.
Exactly. It's not easy.
But what are some things they could be doing to become more sustainable?
They could focus on reducing their environmental footprint, using more renewable energy, minimizing waste,
Sourcing products more responsibly.
ethical labor practices,
Yeah.
environmentally friendly packaging, all of that.
So it's a multi-pronged approach.
They need to look at every aspect of their business.
And sustainability isn't just about doing the right thing, it can also be good for business.
Absolutely, consumers are demanding it.
And they're willing to pay a premium for brands that align with their values.
So it's a smart move for Dick's.
It's a win-win, good for the planet and good for their bottom line.
And it's not just about consumers, it's also about attracting and retaining employees.
People want to work for companies that share their values.
It's about creating a company culture that values sustainability.
All right, we've covered a lot of ground in this deep dive.
We've analyzed their financials, their strategy, and the challenges of sustainability.
But the conversation doesn't end here.
We want to hear from you.
What stood out to you? What surprised you?
What other companies should we deep dive into?
Share your thoughts on social media or send us an email.
We love hearing from our listeners.
Now, before we move on to part 3, I want to leave you with one final thought.
Okay, I'm listening.
We've talked a lot about their initiatives, their financials, and their sustainability efforts. But what about the human element?
The people behind the numbers.
Exactly, the employees, the customers, the communities they serve.
It's easy to get caught up in the data and forget about the people.
So as we head into part 3, I want you to think about this. How is Dick's creating a positive experience for its employees? How are they connecting with their customers? And how are they using their platform to make a difference?
Those are great questions to consider.
It's about understanding the whole picture.
And the human side of the story is a big part of that.
All right, folks, that wraps up part 2 of our deep dive. Stay tuned for part 3, where we'll explore the future of retail and how Dick's can use technology to stay ahead of the game. All right, welcome back to the deep dive. We spent the last 2 parts really breaking down Dick's Sporting Goods Q3 earnings.
Looking at the numbers, the strategy, the whole 9 yards.
But now it's time to,
Look ahead.
yeah, gaze into that crystal ball a little bit.
The future of retail, always an exciting topic.
And maybe a little daunting, right?
A little bit, yeah.
So let's talk about the big trends, the things that are going to shape retail in the years to come.
What's going to shake things up?
And one that we can't ignore is technology.
It's changing everything.
It really is. I mean, think about it.
Augmented reality, virtual try-ons, personalized recommendations.
It's mind-blowing.
It's all becoming more and more common.
And it's going to completely transform how we shop.
No doubt about it.
But for a company like Dick's, with all their physical stores,
Their brick-and-mortar presence.
the big question is, how do they use technology to actually enhance that in-store experience?
Not replace it, right?
Exactly. It's got to be about integration.
Creating something even more engaging, more personalized.
Okay, so paint me a picture. What could that look like?
Imagine walking into a Dick's, and you've got these interactive displays guiding you to the products you need,
Okay, I like that.
or virtual assistants giving you expert advice.
That'd be cool, like a personal shopper, but virtual.
Exactly, or even virtual reality experiences,
Oh, okay, now you're talking.
letting you try out different sports or activities before you buy any equipment.
That's next level.
The possibilities are endless.
But it's got to be more than just flashy tech, right?
It's about solving real problems for shoppers.
Making the experience better.
More convenient, more informative, more enjoyable.
And, they have to differentiate themselves from those online giants like Amazon.
Because, let's face it, convenience is king.
And Amazon's got that down pat.
So Dick's needs to offer something you can't get with a simple click.
A reason to actually go to the store.
A destination.
I like it. So what could that be?
Maybe it's about creating a sense of community.
Okay, tell me more.
A place where people can connect, share their passion for sports,
Yeah.
like online forums or social media groups.
Where people can chat, share tips, maybe even organize meetups.
Exactly. Dick's could build that platform.
Bring people together, both online and offline.
It's about creating an ecosystem.
Not just selling product.
Building a community.
I like it. And, speaking of community,
Yeah.
we can't forget about Dick's role as a corporate citizen.
Their impact on the world.
Exactly. It's about more than just sustainability.
Supporting local communities, promoting healthy lifestyles.
Creating opportunities for young athletes.
They could partner with schools, sponsor youth leagues.
Even create programs for underserved communities.
It's about making a difference.
And consumers are noticing these things.
They want to support brands that share their values.
It's not just about what you sell, it's about what you stand for.
And Dick's has a real opportunity here.
With their connection to sports.
They can inspire people.
All right, well, we've covered a lot of ground in this deep dive.
Financials, strategy, the future of retail, and even corporate citizenship.
But we want to hear from you.
What are your thoughts?
What surprised you?
What other companies should we analyze?
Let us know on social media or shoot us an email.
We're always looking for new ideas.
And your feedback helps make the show even better.
So as we wrap up this deep dive into Dick's Sporting Goods,
I want to leave you with this.
a parting thought.
The future of retail is uncertain.
But one thing is clear.
Those who adapt, those who innovate, those who embrace new technologies,
Those are the ones who will thrive.
and those who connect with their customers
They build a strong sense of community.
and make a positive impact on the world.
They'll be the ones who truly stand out.
We've seen some promising signs from Dick's.
But only time will tell what the future holds.
We'll be watching closely.
And we hope you will too.
Thanks for joining us on this deep dive, everyone.
Until next time, stay curious.